Thanks very much for Mining Journal for allowing Asiamet to participate in the conference. So a slight change in pace from operator in the previous presentation to explorer developer. So I'll just take you through this slide deck, hopefully pique your interest in Asiamet. So the customary disclosure statements, and then who are we? So Asiamet's a relatively new company, formed about 3.5 years ago through the merger of a private incubator company in Australia and an AIM and TSXV listed company by the name of Kalimantan Gold. The objective of our executive chairman in doing that was to form a company effectively at the bottom of the copper market, put together a quality portfolio of assets at a good price to deliver value to shareholders. As it illustrates on this slide, the team has done this before, and they've done it before many times in both big, middle and little companies. Tony Manini, our chairman, probably a guy known to many in the audience, ex-Rio, Oxiana, and now with EMR Capital. He was the architect of the company. I joined the company some 16 months ago with the objective to build out the team to ensure we execute both on our exploration and development and then subsequent operational programs. With my background in the crowd, we have James Dio, who is our CFO, ex-BHP Billiton, also worked with Oxiana, Oz Minerals, so an impressive portfolio. Announced yesterday, we had a chap join the board by the name of Dominic Heaton. Dominic is a proven mine builder, and the most recent of which is Masan Resources' Nui Phao project in Vietnam. Quite a difficult project, and he did a wonderful job, so he'll be a great addition to the team. As I said, AIM listed, capitalised about £100 million, which hopefully at the end of the presentation you'll get a bit of a flavour is not a lot for what we have. And we're making that transition as a company from being a mum and dad sort of stock into being an institutional stock. So in the recent small capital raisings we've completed, we've had the inclusion of the likes of JP Morgan, AXA's not up there, but AXA, and then we have some very large support down in Australia. So it's a company in transition and a pretty exciting story. I won't focus too much on the copper story. I know that's been talked about a lot through the course of the conference, but we think we're pretty well poised to take advantage of what will be a real supply squeeze, or if you like, a demand peak that's coming in 2019 through to probably 24, 25. Okay, where are we? In Indonesia, we have two project areas, the first of which is in central Kalimantan, which is the KSK contract of work. This is a district scale piece of ground, and within it at the moment we have, which I'll talk about a little later, the BKM copper project. That's in feasibility stage, and I'll show you some slides a little later. We've also got a polymetallic or classic VMS style deposit, and then literally a plethora of other targets that we have to follow up on. So very exciting piece of ground. We own that 100% with a very good tenure position. Moving to northwestern Sumatra, we have the Butong Copper Gold Project. This is a porphyry system. Announced on Monday, very significantly, we moved our equity position with our joint venture partner from 40% to 80% for $3.3 million US. So if you do the maths very quickly on the 2.4 million tonne existing resource, we increased our inventory by 960,000 tonnes for $3.3 million. It was a pre-arranged agreement. When the market was fairly miserable, it probably looked like a pretty good deal, but we now think it's an excellent deal. We've just recommenced drilling at Butong, and I'll touch on this a bit later, but we announced late last week, as a result of our recommencement of drilling from surface, a just under 460 metre intersection at 1% copper equivalent or 0.93% copper. I mean, this is a big system, and I'll come back to that a little later. So our first project in our portfolio, which really has been the project driving our share price over the past 12 months, is the BKM copper project. So it's in feasibility. We will finish that feasibility shortly, within weeks. It's an SXEW project, 8-year mine life, 25,000 tonnes per annum copper cathode. Cash cost is not quite as impressive as the previous presentation, but the mid-120s cash, lower second quartile, full cost of just under $1.50, 2.5-year payback, 39% IRR, and worth about $200 million to the company. So bear in mind, that's US dollars. We're capitalised at about $140 million US. So very exciting project, and we're moving forward on that, so watch that space. We'll announce the outcome of that. For the remainder of the calendar year, we will focus on the funding piece for that, with the objective of delivering production in mid-2020 for an 8-year life. And as I said, it's the first of a sequence of projects. It's not our only project. So where are we? We're in Indonesia. For those of you geologically inclined, you would be aware that this part of the world, like South America, has some incredible deposits because of its geology. So, for example, the likes of Tujuh Bukit, of course everyone knows Grasberg, Batu Hijau, and I think our project, as I'll show you in a minute, our porphyry system, will give you a fair flavour of the sorts of things you can look out for. The implication of that is that we have a very large resource inventory for a relatively small company, and we obviously intend to exploit that going forward. So in our current portfolio, the BKM project, which I just talked about in feasibility, 430,000 contained tonnes of copper in resource. Immediately adjacent to that, a polymetallic with lead and zinc, and at Butong, 1.9 million tonnes of copper, 1.6 million ounces of gold. So as a company, we have an inventory of 2.4 million tonnes of copper and about 1.6 million ounces of gold, with base and other precious metals. All of our deposits outcrop at surface, a most unusual thing in this day and age. I mean, most porphyries, as we know, are very deep-seated these days, but our Butong deposit actually outcrops at surface. We've drilled that to 500 vertical metres, and it's still open at depth, and it's open laterally, so we'll continue drilling that through the course of the year. Very good regional infrastructure for both projects, so good road access, very good general infrastructure like power, water and all that sort of thing. Good recoveries on our projects. So we think we're pretty well poised to advance to the next stage with each of our projects. So what's our growth plan and what are the milestones that we've met since the last released information? So we released a preliminary economic assessment in late 2016, and subsequent to that, we've progressed that particular project, the BKM project, to feasibility. We've increased the resource at BKM in mid-2017. We've discovered a new ore body immediately adjacent to that in early 2018. We've recommenced drilling at Butong with some spectacular results, as I illustrated a little earlier, and we'll continue to drill that through the course of this calendar year. From the point of view of Butong, very materially, we've increased our equity position from 40 to 80%. As I said, a 960,000 tonne compliant resource increase in the past 2 days. From a tenure perspective, very good tenure on both projects. So just to qualify what that means, we have the ability, when we're in production, to own the project 100% up until year 10 of production. Subsequent to that, we need to divest down to 49%, but on commercial terms. That's very important. So if the Indonesian group that wishes to participate in the project can't come up with the money, we maintain the project. So it is very much a commercial transaction. We're populating both the board and the management team as we grow with very high calibre people, and they'll join the management team and the board as we tend to grow the business. So I think what the market's not factoring in for our company, which is a very new company, as I said, about 3.5 years, we've made a very material change in our resource inventory position, which I've touched upon. As we've heard through the course of the conference, we're moving into a pretty nice space with respect to the copper market. Now, even at current copper prices, our projects look very attractive, but I think there is a reasonable amount of optimism looking forward in the next 4 to 5 years. I think the last point's an interesting point, and I think it was made in the opening speech of this conference. There's really not a lot of what I call product around to invest in if you're interested in copper, and that's globally. We're listed on AIM, and there's some other very good quality copper companies on AIM. The previous talk is an example of that. But when you look at what's available to invest in, it's a short list, and the quality, when you look around, is limited, and there's really just not much around, in our opinion, particularly on this domestic market here, that has a similar pipeline and management team as Asiamet. So with that, and being mindful of time, I'll finish there. Perhaps just one last comment to make, which is worth reflecting on. The industry's, it is cyclical, and in the last 2 months there have been a number of transactions that have taken place in the copper space, and those transactions have occurred at somewhere between 10 and 14 cents per pound of copper in the ground. We're currently at a bit over 3 cents, and I think that's just symptomatic of what will happen with some of these copper stocks in the space. Thank you very much, and we appreciate your time.